The broadcast is now starting. All attendees are in listen-only mode.
Morning, Eagles. Hello, everybody. Welcome to Turnaround Tuesday. Have a great guest today, Anka Metcalf, live from Boca Raton, Florida. I'd say the number one story, which Blake and Steve have been talking about as a potential manifestation, was a breakdown in the yen here. So all rallies back to the breakdown. The probability would be it's a good sale up between 108 and 108.20. Everyone with me? This was a breakdown that Blake had shown on a massive triangle. Okay. Haven't quite taken out this low yet. And there is a little divergence on the daily, but not good action. Unless you get a complete reversal of this breakdown, there's something bigger happening. We're right there. So the triangle, we have a breakdown. Really, if you called it a descending triangle, which is something I talked about from a long time ago, 118, 108, gives you 98 back down to this major support from last year. Just a shade under par. So that's starting to look more likely. I'd say the second biggest story, and I'm looking forward to what the team had to say because they were leaning towards a continuation of the dollar rally, is, we're back at the line. Okay, so this was a weekly line that we had to throw under, throw over, and now we're sitting at it. So it's going to be interesting to see if the team thinks the euro's a selling opportunity up here or not. I actually have it right up against a 200 moving average here. Already coming off a little bit. I believe it was on the 4 hour. No, it held it on the 4 hour, and it's acting as resistance on the 1. Pretty good momentum here, over 80. And then the last thing I want to talk about is how gold did hold 1310. The general market thesis is gold goes up when the market goes up, goes down, and goes down when the market goes up. But you know what I've really noticed, and I'm going to talk about it with Blake and Steve, is that really everything has gone down together. There really hasn't been much differentiation. Crude is broken. Up until last week, gold was going down. The indexes were going down. Not much of a flight to quality when we were having 1,000-point down days in the bond market. And yesterday I talked about I thought yields could come off again. You never know what's going to happen tomorrow on I believe it's CPI or PPI. We could get another drive up here, but it's my contention. All I see on Twitter is, bearish bond articles and charts, and it wouldn't be a surprise to me if yields are peaking here short term. And maybe that's because the dollar might be heading down as well. So going to be interesting to hear what the team has to say here. Everyone with me? I still remain positive on Euro Pound. I mean, it's not saying anything here. I'd buy breaks. You got a, 40 pip break. I'd buy it with stops under this low. So I know I'm trading a market that's range bound. But my expectation was for a lower dollar. And if we get a lower dollar, I believe that the euro will outperform cable and we could get a pretty nice rally. So we're right up against some resistance here. Clearing 89 from 87 is going to take it to 91. Okay, just on a measured move. Or if you measure the breakout at 90, it's going to take it to the highs at 93. But interesting action in the yen. Pretty good dollar give back today. S&Ps are selling off a bit. Really, I have no idea what to do with the S&Ps. I'm just going to stand by the fact that I think there's going to be another shorting opportunity in the S&Ps back up here above this recovery high from last week. I'm figuring 27.5-ish to 27.65. You know, maybe it happens this week, maybe it's next week. Just sitting on my hands, trying to be patient. And what would make me even more confident is if that happens and the VIX stays above 20. I was pointing out that there's a big difference in the action in the VIX so far from August of 2015 when we had the yuan devaluation and we opened 1,000 points lower in the Dow. Look, it was over in a day and we were back down here. The difference here is, of course, we came off the spike at 50, but it's not over yet. I think it's going to have a hard time trading much below 20 on another, 80 handle rally, 100 handle rally in the S&Ps. Maybe we get back down to the 20 level, but actually this doesn't look done. Does anyone know why I think it may not be done? Because when we spiked up here, we actually, it was a confirmed high. So, like Steve was saying, we could have wide ranging trading here, but I think these days are gone. And maybe what the market wants is to set up complacency and get back to 20, maybe a little lower. And people will say, oh, that was just an aberration. But to me, the characterization of how it's acting here. Also, I had this speed line drawn, I don't know, about 6 months ago, and it actually got through it. So interesting action in the VIX now that they wiped out all the short volatility players. Now the market's coming back down, but too late. They all got blown out here. So people that were selling volatility, and it happens a lot in selling options, and a lot of people make a great living writing premium, but there's always that one time where you really need great money management skills if you're an option writer, where you're picking up quarters off the sidewalk and then the steamroller comes. So people are steamrolled, doesn't matter, the VIX came back down, their history. So those are my views. We have a nice interview today. Stick around. Probably pretty good action happening in the trading room. Let's take a look, a little peek in here, because everyone listening to me belongs in here, because face only lasts a certain amount of time. See, Blake's pretty active in here. Amanda's running it, doing a great job. There's Steve Volge and another 90 or so people in here. So JT, Blake. This is where you carry on what we're doing in face for the rest of your trading day. And with that being said, I'm going to pass it over to the CEO of ForexAnalytix, Blake Morrill.
Man, I hate that term. The CEO. No, we're all just a bunch of teammates here. I'm a co-founder. How about that? Anyway, good morning, Dale. How are you?
All right, buddy. Good. So you got that breakdown in yen, Blake. You've been talking about it for quite some time.
Yeah, the yen is we're seeing it. I mean, the dollar yen is vulnerable. Obviously, we're breaking out of the triangle. I mean, that's the bottom line. But this support right here, very, very important support, as you can see right through here. Yeah, this is obviously very key. So where we go from here is going to be probably, has more to do with what happens with equities. If we can continue to break down. Yesterday it's such a bummer. I'm short some euro yen from yesterday because we were rallying back, challenging the underside of this trend line. I'm like, okay, well, I'm gonna get short some. Of course, you're never short enough.
When you're right, never enough. When you're wrong, always too much.
No, I woke up this morning and I'm like, oh, man, I have a position, so I'm not going to complain. I'm just, but at the same time, I'm like, man, I wish I had a much bigger position. Short the yen, dollar or euro yen, or long yen. But there's a lot of let's talk about this dollar yen here, and let's talk about what the possibilities are. This is a long-term, and this is a long-term weekly chart, and any which way you slice it, the yen is strengthening, and that is not good for risk appetite. So when you look at the stock market today, you've got to, if you're not paying attention to the yen, that could be your, it could be very dangerous for you, in my opinion. I think this yen is telling us that the stock market is going to roll over today. I know that futures are already down right now, like Dow futures are down 70 points or whatever, but we're still really not that weak. And I think you got traders that are coming in, and they're doing the normal. Stocks are down in Europe, so I'm going to go ahead and Jesus, hold on real quick. Sorry, guys. I'm short some pound dollar. Hold on. I'm going to close it. I'm telling the guys in the chat room.
Nice.
Yeah, I shorted it this morning at 39.05 or something. So I you get a move like that for no reason. It's like, okay, I'm going to take that off. But anyway, but looking at this dollar yen is dangerous, in my opinion. And the dollar yen looks like we are going lower, and the yen looks like it's going to strengthen. So if you're out trading equities right now, and you're not paying attention to the yen, which I'm gonna go ahead and assume at least 50% of the trade desks that are on the banks aren't really paying close attention to the yen, because they're younger guys and gals. They didn't, they're like, well, they don't understand the correlation. But this yen right now is telling us, in my opinion, that stocks are going to weaken today, and they're going to stay weak. So, if you're out there buying the dip in stocks because you came in and you sat down at your New York desk or your Connecticut desk or your Miami, Boca Raton, Florida desk, and you're just sitting down, and you're like, hey, futures are down 100 points and Dow futures, I'm going to just go ahead and buy this dip right now. Well, I think you could be sorely mistaken this morning buying that dip with the yen as strong as it is. And I will tell you this much: if the dollar yen breaks this, if we break 107.30, not only is the yen going to strengthen, but I think things are going the wheels may fall off the bus here. So, and I think that's like the bigger risk of the market at this moment. And so anyway, and let me point something out regarding this yen. I'm going to ask you this really quick, and it's actually highlighted on this chart, and it's not this. So I'm going to ask you guys a question here. What do you see on this chart? And I'm going to allow either you to answer, Dale, or the guys and gals. I'm going to look at the Q&A panel, which I don't always get a chance to do. What on this chart suggests that the dollar yen could be headed lower? Can you spot it? It's very subtle, but it's very prominent. Can you guys see what could suggest that the stock market is heading lower here? See if you guys can catch it. It's a hard one to catch today. Hard one to catch.
Took out Friday's reversal low.
Scott says triple top. That's good. I think these are good observations, by the way, and none of them are wrong. So this far, David says small breakthrough the triangle. Yes, we already talked about that. That's apparent. Forex Gal says wedge. Mod says inverted cup and handle pattern. That's a great observation. It looks like an inverted cup and handle pattern. If you guys didn't, I wasn't even looking at that. Mod's looking at that. Vamsy said higher lows.
I can't take it anymore. Tell us.
Dimitri says still not oversold. Okay, so wait. DB said RSI failed at 50. And that wasn't what I was looking at, but I could see that. Okay, so one thing that has got me this whole week that I've been, well, the last 2 weeks or whatever. If you look at the dollar yen from here, see this the high here, okay? See the low here?
Yeah.
Okay. Do you see this rejection right here?
Yep.
That was a 38% retracement.
Oh, the weakness of the retracement after going.
Exactly. So what that suggests to me is we're probably heading to 105. Whenever you get a shallow retracement like that, Scott says shit, of course. Whenever you get a shallow retracement like that.
But Blake, a lot of people don't know that. And so that's a pearl and people should write it down.
It's like I said, it's not super obvious. Now, for those of you guys that have been, you're looking at this and you're going, okay, I see the triple top, I see the, cup and handle pattern. Look, all great observations, all great. I'm not going to take away from that. What I'm going to tell you though, is and this is something that, if you've listened to the Wise Trade daily webinars for years and years and years, that when I was at Wise Trade Group and 15 years of webinars with you guys, or 13 years or 15 years, whatever it was. One thing that you've always heard me say is the more shallow the retracement, the better the opportunity for an explosive move. So I'll draw it out for you. So if you're looking at in here, let me put it on normal. Let me grab. I'm just going to grab any chart. So I don't even, Mott is nothing. So that's good. I thought Mott was Motorola. Didn't that used to be Motorola? Did Motorola get bought? I don't know. This is how much I pay attention to equities. I don't care. I wanted a clean space to draw from. So when you have a move, okay, you have retracements, right? 38%, 50%, 618, 61%, 78%, yada, yada, yada. Okay. So whenever you're looking at a move, okay, if you stop at the 38% retracement or the 24% retracement, the chances of a resumption of trend are very high. That's a high probability. When you get to the 50% retracement, it's still pretty good probability. Once you get to the 618 or the 786, it becomes questionable. So when you get down to like the 786, there's a good chance of a consolidation. Or if you get down to the 50%, it's a consolidation. But if it's only a 38% retracement or 24% retracement, 50% retracement, the chances of us continuing higher in this, and this is going up, is greater. Does that make sense? A shallow retracement usually, represents a potential for continuation of a move. So when you are going over to the, going back over to the dollar yen, we have this, let me go back over to my drawing tool here. We have this move down, 38% retracement, stopped. Chances of us continuing lower now are quite high. Okay. And if we would have went like, to this, 78% retracement, I'd been like, damn, we're going to be in this triangle a little bit longer. And we're going to continue to build the apex of this wedge or this triangle or whatever it is. But because it was such a shallow retracement, the chances of a continuation are high. Now, with that being said, if you're sitting here looking at the dollar yen and you're like, okay, that makes sense, and it looks like we're going at least below 106 and maybe even lower towards 105 and a quarter or maybe 104. What does that make you? How does that make you feel about equities? Well, if you are sitting here buying equities, you're buying equities and you go, oh man, I just got long this morning because, we've had 2 days of the Dow being up 400 points. I'm going to go ahead and buy today because today makes a lot of sense. After 2 days of an 800 point rally in the Dow, you're going to go ahead and start buying today because you're getting such a good value. Now you've got to be second guessing yourself, thinking that this yen could actually strengthen even further and things could get a little bit more out of control, in down to the, we can see more downside, in my opinion. And if you notice, like the S&P, for example, we only retrace 50% of this retracement. 50%. Remember, we have stopped at the 200-day moving average to basically, 2 times. I'm thinking if we break back through to the 200-day moving average, we're not going to be so lucky next time around, in my opinion. If the stock market actually does go down from here, it's not stopping. We're gonna do something like this. All right, and this is my opinion. But based on what I'm seeing with the dollar yen, this S&P probably is looking like we're going down to 2,400, maybe a little bit lower. Now, if you go, okay, well, 2,400, a little bit lower, what does that mean? Well, this is what is that right there? That's only a 24% retracement of the move from 2009. The lows of post financial crisis to the highs. That's only a 24% retracement. Wait, is that 24%? Let me just double check that. I might. Yeah, it is 24%. So that's only a 24% retracement, and that's still very shallow. Still very shallow. All right. So I'm just warning you guys that what we're seeing here in the yen is, to me, not suggesting that it's time to start buying stocks again. It's actually signaling to me the opposite, that the stock market might be in for a little bit of a rough ride here. And let's chat tomorrow. Let's talk about tomorrow. So the most important data of the week is coming out tomorrow. Do you know what that is, Dale? I don't know if you're listening. For those of you that are listening, he may have it on mute.
Can I say?
Yeah. Go ahead, Stelios. Good morning.
Hey, good morning. CPI.
Inflation data, correct. So let's say inflation comes in a little hotter than expected. I would assume that yields go up. And if yields go up, stocks don't like it when yields go up. We've seen it recently. If yields go up, yeah, I mean, Stelios, wouldn't you imagine that the stocks might come under a little bit of pressure as a result?
Yeah, we've said this for some time now. We've been saying it. If you look back from the rally in the start of 2009 until last year, one of the major reasons for the rally, okay, obviously the economies were recovering slowly, but you had ultra low rates, cheap money, stock buybacks financed by cheap bond issues, all that. And we were saying when yields go up, whatever the trigger is, when they do go up, you're bound to see a retracement of that move at some point. So and this is happening, like you said. We're nudging 3% in 10-year US. And it doesn't look like it's stopping. You've got inflation ticking up everywhere. Did you see the Swiss data today? PPI in Switzerland beat quite a lot. And it's Switzerland, which is has been zero for ages. So it's creeping up everywhere, and we really have to be careful about that. So I agree with what you say, Blake. I think any kind of recoveries in stocks, I would be selling them. It's. I think it's the right trade to do.
Yeah, I mean, it seems like it to me, and technically, I mean, you got to think about where we've come from, and a pullback, even of a 38% pullback from the 2009 lows, which let's go back to the discussion I was just having about. Okay, well, if we're in a bull market and we get a 38% retracement, is that the end of the world? Probably not. Would that be a basis of a continuation higher? Sure. But do you know what a 38% retracement does to the stock market? That takes us down to 2,000 in the S&P. we're at 2,600. You know, and you go, wow, you know, 2,000. That's another 20 some odd percent drop from where we're currently at. Is that really that uncalled for? Is it really that, you know, obnoxious of a pullback? Is it really disruptive to the current uptrend in the stock market? It's not. And based on the gains that we've seen, I mean, if we went to 2,000 in the S&P, that is just that's going back to the election night when Donald Trump was elected. That night, that's going back to those lows. Would that be really that, you know, that obnoxious or that unheard of a call? In this environment, I don't think so. And especially, you know, going back to what you were just saying, Stelios, after years and years and years of monetary stimulus and ultra low rates, as rates go higher, to see the stock market correct another 20 some odd percent from where we're currently at, I don't think it'd be that abnormal. But it would hurt some people, right?
Yeah, I think that it would be healthy. You know, it's a healthy correction. You have to have two-way price action in the market. Steve always says that it's something that will be healthy, and it would obviously shake out a lot of people. But over the long term, it is something you expect, and it's something that should be happening in markets. Now, if you ask me, in the long run, and by long run, I mean 10, 20, 30 years from now, I am an equity bull. Simply because we have deficits in every major country. You know, the US is $1 trillion a year deficits. Valuations have to go up in dollar terms when that happens. But a correction, like you say, of 38%, or, you know, 25, 20, 25, 30, whatever it is, I personally think is going to be very healthy. And personally, I'm going to be looking to start initiating longs in, you know, in things that I like in equities. But at the moment,
guys,
I'm buying weed.
Good morning, by the way. I hope
Good morning, Steve.
You can hear me well, right? Because it's the first time I use this headset.
Yeah, we can hear you perfectly fine.
You still have the same annoying voice, but yeah, we can hear you.
But personally, I have to tell you that I'm not super convinced that a strong correction, first of all, is it going to be healthy? More than healthy. But it would be even healthier if it came earlier. What I'm trying to say is that with valuations being that stretched as they are, and so many people invested with leverage, I'm afraid that there is a decent chance that a strong correction lower might actually trigger a market rout that might spill over to the economy, because you remember we've had this conversation plenty of times. I'm afraid that in the recent two business cycles, in order for the economy to recover faster, the central banks and politicians have put the cart in front of the horse, meaning they've tried to stimulate economic growth by stimulating financial assets. So I'm not 100% sure that if financial assets, start dumping, that this isn't immediately going to spill over to the economic recovery as well. So I think that if we saw a healthy correction like a couple of years earlier, it would be perfectly fine. But I'm not sure in such a mature business cycle, if actually, let's say we end up retracing like 35, 40%, it can stop just there. That's my only, in quotes, fear or worry. I don't know what you think about it.
Well, yeah, it could, and it cyclically it makes sense, especially considering we're so far into this business cycle right now. So, I've been telling a lot of my friends, my personal friends that I can talk to about this stuff without scaring the shit out of them, is that Mike, listen, we're probably going to be in for a rough patch, in the global economy. We'll probably start losing some jobs. We're going to, we're probably going to, we're going to have higher inflation. We're going to see the stock market's correct. We're going to see consumer spending come down, but it's normal. It's not abnormal, especially after this type of expansionary period that we've had. And it's not going, and it is healthy, believe it or not, for this all to happen. But could the stock market trigger that shift? Yeah. And the scary thing about sentiment shift as well is when sentiment shifts globally, and it starts from the top up. It's top down, if you will, top down, I guess I should say. You have global leaders looking at the stock market going, stocks are starting to weaken here, and because stocks are starting to weaken here, I got to be a little bit more careful with, my spending and how we're positioned globally, and, and how, and on our hiring trends. And it trickles down, if you will, just as it trickles the other direction.
It spills over. Yeah.
It is a little bit of a spillover. Anyway, Steve, I got to pass it over to you. Stelios, good to hear your voice. Dale, it's always great to talk to you. And by the way, Brian says, so to summarize what I was saying earlier, the shallower the bounce, the more likely the prevailing trend will continue. Or yes, the more shallow the retracement. That is correct, Brian. And Ed, thank you very much. I thank you for the stock recommendation. I appreciate it. And guys, I'm going to pass it over to you, and have a great one.
Good hunting, Blake.
Thanks. All right, guys. Thanks.
We have quite a few things to.
Yes, Steve. How are you?
I'm good. How have you been, Dale?
Good, buddy. So dollar back inside that line. The action today. Do anything to maybe.
But by the way, if you remember, I'm just going to have a very brief mention. I know that Blake wasn't paying attention so much to that head and shoulders. Probably he didn't like it that much. But as you remember, we were tracking the USD yen as a head and shoulders formation. And keep in mind that today, in essence, we completed that pattern. Okay, I mean, we came like 2-3 pips away from that. So if you want to be
government work.
Yeah, exactly. So if you want to be a USD yen bull, you have 2 reasons to do so. First of all, we are at support from the previous low. Second of all, we completed the head and shoulders pattern. If you remember yesterday, I was pretty adamant that I consider that this was, I had said multiple times that this level would act as a magnet, that even if we rebounded once again from there, we would still break lower to test it. And that has happened. But on the other hand, I have to tell you that I see nothing that would turn me, despite the completion of the head and shoulders formation and, in essence, the retesting of the previous lows, I honestly see absolutely nothing that would turn me bullish, the USD yen. So, so far, whatever we're seeing here is still bearish price action. And in all honesty, the next area of support I have here is below 106. So, it's exactly 200 levels away from where we currently trade. Okay, so there is obviously more downside potential. I think I lost sound for a reason. Give me a second.
Everything okay, buddy? Steve lost sound with his new headset.
Sorry about that. Can you hear me?
Yeah, you're good now.
Okay. I think did I cut off before? What happened?
Yeah, you cut off. You weren't here.
Yeah, that was weird.
It's a brand new headset.
Yeah, I don't know. I'm going to check it out afterwards, but I always have the other one connected as well, so no big deal. So, bottom line, there's nothing bullish here. I think we can easily keep moving lower for at least another couple of 100 pips, and that's something you have to keep in mind. On the other hand, stocks have recovered somewhat, but keep in mind that, nothing has turned them bullish yet. Obviously, the 200 DMA in the SPX is very, very important. but that doesn't mean that important levels don't break to the downside. So yeah, dangers are still for a move to the downside. Speaking of shallow retracements, because Blake mentioned it before, keep in mind that another instance of a shallow retracement can be seen here in the Aussie USD if today it confirms that it will reverse from here, because so far today we're seeing like a little shooting star candle. So I was expecting, I even had an order actually to go short Aussie USD at 78.90. It came very close, it came like 12 pips away from me getting triggered, but it didn't happen yet. So I'm going to see what I'm going to do with that. But for sure, so far so good, and it can easily roll over from here and head directly to new lows from there. Okay, so keep that in mind as well. Now, having to do with the euro and the pound, because we have people asking, first of all, I have to say that nothing really has changed having to do with the euro USD. I mean, we remain within an ascending channel. Obviously, we had some corrective move lower, and there is nothing telling us that it can continue lower from here. But you can't really turn bearish as long as this ascending channel is holding, and as long as, keep in mind that the euro hasn't broken any significant levels to the downside since a very, very long time ago. For example, the first important area of support is definitely going to be this 121.60 that we found the low recently. We didn't even test that level. Even if we broke below there, then this area just below 121 that we found the top in September, and just for 3-4 days got rejected price action once again at the very beginning of the year. Can be a very strong area of support. The 50-day moving average is also currently at that area. So that means that even if you want to be bearish to the euro USD, you have to be extremely, extremely careful, because we really have no indication that that the trend is reversing here. Now, obviously, the cable has been weaker recently than the euro has, but still, I mean, as long as the cable trades above 136 roughly, there is really no technical damage that has been done. So obviously, between the two of them, euro looks stronger. So obviously, if you want to be long one of them, I think that euro in the short term looks better. But I think that both of them are holding just fine, considering. Obviously, everything can change tomorrow, right? Tomorrow we have the CPI. Here's the dollar index that you mentioned before. It seems to be moving lower from here, but everything can change tomorrow. So, for example, tomorrow can make these 2 days of little weakness in a retrospect look like just a very small correction to this bounce higher. Strong CPI tomorrow should definitely bring a lot of dollar buying. And I think that it will very easily take us to 91, if not slice over it. So tomorrow is going to be the make it or break it day for the DXY, because if the CPI, on the other hand, misses tomorrow, you can easily see this little recovery just vanish. So we can easily be testing once again the 88.50 area, even break below it, temporarily, because I honestly don't believe that even if we see dollar weakness, it can be sustainable for a long period of time. I'm still going to be looking. I don't have any dollar positions at the moment. I would have the Aussie USD short if I got triggered, but I didn't, so I don't have any dollar positions at the moment. Yesterday, my gold short was also taken out at the other half I had at break even. So I actually have absolutely no dollar exposure at the moment. And something, I'm looking forward to getting some more dollar exposure after I see what happens with the CPI tomorrow. I want to see what kind of moves we're going to get, if initial moves are going to be false or whatever. So I think it's it's quite imperative, because I think that the whole market is waiting for the CPI tomorrow, which means that there are a lot of people that are looking to be active in the market and are not just because of that, which means that tomorrow we might see big moves. Once CPI is out of the way, I think there's going to be a lot of interest to be buying or selling dollars. Depends on what happens with the CPI. So I do think that tomorrow can see big moves and big follow through the days that will follow after that. So keep that in mind, having to do with decisions, because I do think that unless we get a very, very initial spike that gets retraced, if we see a move that is actually sustainable, I think that it can actually be sustained for a period of weeks, right? So I don't think that by losing like a few pips initially will make the idea of taking a new position in dollar pairs a stupid one tomorrow. So as I said, the dollar index is positioned in such a place that we can even move to new lows if we get a weak CPI print. But definitely the big squeeze is going to happen if we see a strong CPI print, because I do think that short positions are going to start getting squeezed out in a spectacular way. So the risks are tilted for the dollar to the upside. Okay, I'm not predicting what's going to happen with the CPI, so you don't get confused. I'm saying that, let's say that it's 50-50 if it's going to be weak or strong. But if it's strong, I think that the corresponding move is going to be much stronger than if it's weak. That's all I'm saying. Okay, so let me have a look at, because I think we have a decent amount of questions. Yeah, most of them are answers to Blake's questions. Okay, CPI. Steve, what do you think of silver and gold? Are they sell on strength? Something, I don't want to sound like, a broken watch, but honestly, it's all going to depend on the CPI. I think that gold is, despite now not having a position, I still like it to the short side. I think that it's at a very good level to resume for at least one more leg lower. So I think that a decent CPI print tomorrow will definitely bring gold immediately down to 1300. I mean, intraday, I really believe that we can easily beat. I mean, now we're 1325. I think that tomorrow, if we get a strong CPI print, we can beat $25 lower easily. No sweat. Let me see. Silver, as you see, is even weaker. I mean, silver just tested, a few hours ago, the first area of resistance. This 1665, 1675 area, and it's already at the lows of the day, right? So it's unchanged. So silver as well. If we get a weak CPI print, I think it's going to do its next move again down towards 1575. So it can easily move $1 lower within a matter of a couple of days.
Steve, you mean a strong CPI print, right? You said weak.
Yeah, sorry. Yeah,
no
strong CPI print, obviously. Yes, thank you. So I think that silver, can easily go down $1 on a strong CPI print and retest this area. Okay. Now, on the other hand, obviously, silver, as we said, has some long-term inverted head and shoulders potential. But for that to happen, we need to see silver pushing towards the highs quite fast. Because if we take much longer, then the symmetry of the two shoulders is going to go away, and then you stop seeing it as an inverted head and shoulders formation, because you don't want one shoulder to be that big and the other one like to be double the size. Okay, so honestly, that's why I'm still staying away from the bullish scenario, because in the shorter term, I see more potential of more weakness ahead. Now, as I've repeated multiple times, my long-term bias is for stronger silver and stronger gold. But long-term bias doesn't mean that it's going to manifest tomorrow or the day after tomorrow. It might manifest in months from now, right? Okay. Let's see what else we have. Blake selling my own book. MPX is great. Which stock has operations in Arizona, your home state? Okay. Nick is asking Blake, what does he make of this? It's an article. Let's have a look at it. Short bet against Europe. Quite dangerous. I think that there is more value in Europe unless we get a surprise with the Italian elections. I see this being as a dangerous proposition because I think that between US and European stocks, definitely there is more value in owning European stocks at the moment. As I said, unless they have some reason to believe that all hell is going to break loose with the Italian elections. Steve, good call on copper. Let's look, maybe a pullback to buy. Let's see if something has changed today. Yeah, as you see, it's recovering quite nicely, but it's still not out of the woods, right? I mean, for me, I need a daily close above, let's call it 3.16 to believe that, okay, this was the low. But my thesis remains that I'm viewing this so far as a corrective move. We've now seen this is the second day of strength for copper. I think that a daily close above 316 increases by a lot the chances that we found some tradable low. Okay, so you don't want this scenario to happen here, this rejection from here. So let's start deleting some stuff because that all has already happened. So now this is the scenario. We either rebound there and get rejected, in which case I will be looking lower towards roughly 2.95. The 200 EMA is also there, or we actually break above that level, in which case I think that the chances to push to new highs are extremely high. Okay, so we are almost there. We're almost, at the juncture, technical juncture, of course, right, for copper. And we're gonna, I think actually this is a double confluence of supports. Yep, if you extend this line, you can see that we found actually support there. So yeah, I think that copper has decent chances of pushing to highs. Very decent chances. What do I think about the USD ZAR? Let's have a look at it. By the way, we did have, I think we did have political developments from South Africa, right? I got an email as well. Now they've asked Zuma to resign, something like that. So we should have some volatility. What do I think about the USD ZAR? First of all, the USD ZAR has been one of the weakest exotic pairs of the dollar, right? So the ZAR has been one of the strongest currencies against the dollar from the exotics. And I can tell you one thing for sure, is that I was seeing nothing bullish with this consolidation, as I'm seeing nothing bullish with this consolidation, right? So the answer is very simple. I think that, no questions, I remain bearish. I have to see something spectacular here to change my thesis. I think it looks good for more downside. Very good, actually. If you remember, I said weeks ago that ZAR is one of the preferred longs against the US dollar. Where do you see the potential short-term high to the USD CAD if the CPI comes in stronger tomorrow? Seems like some good upside given the recent CAD news. Thanks. Absolutely. Let's have a look at it. That's a good question. How much more it can recover? Okay.
So recovered that spike high that we called last.
No, it hasn't. Friday. It hasn't. Correct. It hasn't. But on the other hand, as you see in a regular fashion, the market is currently consolidating ahead of the CPI, right? So if you ignore the spike, that can easily be interpreted like a triangle that a strong CPI print can definitely produce another thrust to the upside. In which case, the levels I would be looking for, I can zoom out so you can see, that there are levels of importance, are this 127.80 roughly, which is also the 78.6 from the move that inspired from the highs to the recent lows. And then definitely the area that had been tested multiple times as a resistance when we were in this range, which is at 129. Okay.
Isn't Grega looking for about 131 if you do a quality from the September low?
Yes, he is.
And then from the low we had a few weeks ago or a week ago.
He is. And that would bode well also with the retest of the 61.8. So the areas I would be looking for, in order are, a first thrust higher. I think 127.80 you should be looking for resistance. Then it's 129. After that, it's 131.30, which is the 61.8 of the move lower. Regardless, and of course, we cannot judge or say in advance because we need to be monitoring price action, and we're going to, see how it evolves later on. Regardless, looking at the long-term chart and the weekly chart that I've shown many times, I'm not looking for the USD CAD to keep on pushing higher. So I will be looking for opportunities to be short the USD CAD later on. Okay. So for example, let's assume that we see strength and we go all the way to 131.30, especially if we make it to 131.30, I will be very, very actively looking in the market to be short USD CAD. Okay, let me make that very clear. And the same applies to the USD NOK, by the way. As you see, we got a major, we get a CPI print and we rebound here, which is a very good level to rebound because this is a well-defined support resistance area that we're retesting now. So let's say now that we moved lower from there, let's say that we rebound again higher. Okay, I will be looking to sell USD NOK strength. I don't know yet from where because it depends. Now, assuming that we get a strong CPI, I will first want to assess how strong this rebound is, how devoted the market is to something like that. And then I'm going to be looking at equivalent levels. I might be looking to reshort at 820, for example, if I see it being very strong or whatever. But I will be looking to be short again, USD NOK in the future. Okay, regardless of how strong it might become for a few days or even a few weeks. Okay, because my medium to long-term thesis is definitely that I should be short the dollar against especially specific currencies, and NOK is one of my first choices. Okay. Question about a double top on the pound Aussie daily. Yes, that is a potential. We said that since the beginning, that is a potential, unquestionably. But it's too early to call that, right? Just because we see 2 days of weakness, that doesn't make it a double top because we are still respecting, a series of higher highs, and we're still above what can prove to be a long-term bottoming pattern. Okay, so yeah, there is that potential, but I think it's quite dangerous assuming that so early, okay? Because we have no technical damage done yet here. Definitely, though, momentum is lacking to the upside for now. So, as I said, initially my thoughts are, I want to be sidelined. I think there are better opportunities out there, and I'm just monitoring for now. If I see a very strong move or a very strong technical development, I'm definitely going to tell you immediately, or if something changes to my thesis. Who do we have for an interview today, you said, by the way, Dale? Euro USD could be head and shoulders now, right shoulder. Yeah, I'm seeing what you're saying. I saw it before as well. But, assuming head and shoulders or inverted head and shoulders formations just because it can become such. I mean, I see what you mean here. You're saying that perhaps, let's say, this can prove to be the neckline, and we might see like a move like this, something like this happening now and then breaking below there. Absolutely. But in this case, anyhow, at the same time, we will also have a break of this ascending channel. So, we will already have some technical indication. But, let's not, let's not just, jump ahead with this, because simply, obviously, to begin with, we need a strong CPI print tomorrow for that to manifest, right? Now, if it does, we will concurrently have a break below this channel, in which case then we will be looking for support at this level. Now, if that fails, then we're going down to this level. Regardless, it's not about only which levels we're going to break, it's the manner we're going to be doing it. So even if we keep dripping lower, that's not going to turn me bearish, the Euro USD. I need to see something that smells impulsive to turn bearish, because Euro USD can easily retrace a bigger percentage of what it has done already without, in essence, turning bearish, okay? But yes, this can prove to be a little head and shoulders formation, in which case, let's see what the implied target is going to be. This is the head, and let's assume we break from here. Then the implied target is going to be down at 119. So in essence, the implied target of such a head and shoulders is going to be down at this area of support that you see here marked, okay? But as I said, this is just an assumption. Let's see what happens tomorrow, because for that to happen, we definitely need a strong CPI print out of the US. Otherwise, let's say we see a weak one, you're going to see the exact opposite thing happening. You're going to see Euro USD pushing higher once again, perhaps even to new highs to finally test this long-term 61.8% retracement at 126. Okay, so it's either that or this happening. In any case, as we've said, since the very beginning of the week, all eyes are on CPI. That will define the price action, perhaps even for several weeks ahead. So keep that in mind.
You got about 3 minutes, Steve.
Yeah, I'm having a look if we have any more questions. By the way, let's have a look at crude. And if we have any other questions, this is your last chance. Okay, crude is pushing
for today, not forever.
Absolutely. Okay,
crude. I'd miss you, man. I'd miss you. If this was it, your grand finale here.
Yeah, crude is pushing lower once again. I think that the 38.2 might act as a magnet. It's at 57.24. So this is quite an important level. If you remember, I said yesterday that the price action tells me that the momentum we had to the downside, although we retraced enough having to do with price, the correction is not over because it happened too fast. So we can easily have one more push lower. And keep in mind, no matter how bad it looks, as long as we stay above $55, the uptrend remains intact. So, positioning, of course, has more to be squeezed. So, on one hand, we can easily see, movement like this, right? But I think that 55 is going to be a very hard level to crack. So the closer we get to 55, the more I would caution that you should be careful. Okay, let's have a look at the Kiwi. As you see, the Kiwi remains stronger once again. Let's have a look at the Aussie Kiwi so you can see. So, as you can see, what were we saying yesterday, Dale? That this area can act as resistance once again. Today, we already have an outside black candle. So today's candle is very, very bearish, which tells me that this scenario that we drew several days ago, that we might come back, retest that area and fail, with today's candle has a very increased chance of actually manifesting, right?
Yeah, the measured move off the breakdowns down to your long-term trend line at 104.5 or so.
Yeah.
Just a measured move. Yeah. Nice.
This trend line. Yeah.
Yeah.
Yeah, exactly. So be very, very careful. And as I said several times since weeks ago, I prefer, if you want to be long one of the two, go with Kiwi. If you want to be short one of the two, go with Aussie. Okay. As long as we remain below 1085, I think it's a clear choice. We said once again, keep in mind it's not pretty, but this is a head and shoulders formation, right? And this is the neckline.
Yes. That would be like 87 on euro pound if we broke down. So Aussie Kiwi already did it, right? So it would be analogous to about 87 on. So you're getting much clearer choices for trade selection on Aussie Kiwi, those two, than you are from euro pound.
Yeah, just look at it. I mean, it's showing some strength again, but are we still within the channel? Absolutely, we are.
93. No.
So,
all right.
So, if we break above 89.60 in the euro pound, then we can start looking higher. But unless we do that, why not get one more rejection from there? We can easily do that, right?
Everything can happen in trading.
Yeah. But I mean, we shouldn't push our lucks in situations like this, right? Because at some point, it's going to break out. There's no question about it. I mean, it's inevitable. But why hope every week that this is the week that's going to happen when we are in a range since the middle of September?
Exactly.
Okay, so tomorrow, huge day. And I think that ahead of tomorrow, probably we're not going to see super action. I mean, some things will be moving, but I think that especially the closer we approach the CPI print, the more the market is going to start consolidating in the middle of recent ranges. Okay, so don't get chopped up trying to trade things until then. I think it's better now that we're just like a day before. It's better like if you, unless you are in some profitable positions and you just want to retrace.
Treat it like the NFP or the Fed. React to the reaction.
Exactly.
Don't be heavily positioned into this number.
Exactly that.
Okay.
Enjoy the interview, Dale. See you all tomorrow.
Good mentoring on top of your analysis.
Thank you, Dale.
All right, buddy. So, Anka, I see you, and I'm really looking forward to talking to you and hearing about your journey and what you're doing now. So I'm now making you the presenter. Looking forward to hearing your voice, and you can share your screen so we could talk about maybe a few instruments that are on your radar. There she is.
Good morning, Dale. Just a quick sound check.
Yes, loud and clear, Anka. Very nice to meet you. Thank you so much for. Yeah, thanks. Thanks for coming into our community today. And, markets are pretty wild, so I appreciate you being able to take time away from the market to be with us for a bit today. I like to start from the beginning and I went to your website. So you've been trading since '03. I'd like to know how that happened for you, how you ended up in the trading business, a little bit about the beginning of your journey, and then we could get to your, your evolution of where you are now.
Okay. First of all, thank you so much for having me here today and speaking to your audience. And I began trading professionally in 2003. So what that means is that I gave everything up, started my full-time career as an independent professional trader. And that was the point where I said, okay, this is it. It is, I'm trading my funds, I'm trading my accounts. This is for real right now. So before that, I was swing trading. So let's start with the beginning. I have graduated I've received actually a bachelor's degree in journalism and the science of communication from the University of Bucharest.
That was my major.
You really?
Yeah, and see, we both ended up in trading.
I know. And I think that's really good because we like to, kind of like build rapport with people. Yeah. And I think this is great. And after I graduated, I started working in the banking industry. And right off the bat, I was into an international division. And we were dealing with the dealing desk, with Forex, so with everything else. So I was very much interested in everything that was going on. And following my interest, I continued my education, but this time in the economic field. So I went for a master's degree in international transactions and foreign markets, and that is stock market and currency markets. And after I graduated, I became more and more interested in everything, in the whole process of trading. And I was literally exposed to a great environment while working in the banking industry. And I was in investment banking. So long story short, how did I come into trading? So having this interest, I kind of like developed, and I watched the markets on my own. And I watched to see how they develop. And I came in here in the United States in 2002. And from 2002, I continued to work once again for a big financial investment company in Detroit, Michigan. And that was the time when I was really exposed to hedge funds, and I was really exposed to a lot of trading the equities market, and swing trading and position trading. So active investing. So I was so attracted to this field, and I took a lot of classes here. Obviously, I took a lot of classes in Europe, and I have a lot of trading education that I have received in Europe and here in the United States. And it's a continuous process until you kind of like find your niche and find what you're looking for and find what your comfort zone is. Because to me, trading is all about comfort zone. And what really drove me to become a professional independent trader was first and foremost the commute. I was commuting literally about an hour and a half to go to work and an hour and a half to get back to work. And now for day trading, I actually trade less than I was commuting back in 2002. So that's a big plus for me.
Yeah. I love my commute. And which bathrobe should I wear today? And do I have to shave? So let me ask you, with all the education you received, and now, you're on the other side of it and you're coaching and teaching, did you have a mentor or anyone that was a major influence over?
Absolutely. Yes. You have to have, like, without a mentor, I would have never been where I am right now. I've had the opportunity to have in fact, I did have 3 mentors that guided every single step of the way, guided my steps towards success, and also have drilled into my head constantly, capital preservation, risk to reward, good trade and bad trade, photographic memory. Try to remember a good winning trading pattern. Try to remember, how it feels to have a winning trade, how it feels to have a losing trade, psychology. So everything is so important to the development of the trader. In fact, one of the best piece of advice that I've received is that I should keep it super simple. The simpler you keep it, the better it is. Us as traders have the tendency to overcomplicate things, and we love to add all sorts of scenarios. Well, in fact, the first reaction that you have in front of a chart is the right reaction, is the best reaction, is the right thing that you need to do. Because if you look at a pattern and if you're trying to squint, or if you're trying to make up something that is not there, there's literally nothing there to trade. So keeping it simple is the best piece of advice that I have ever received, along with anything else. I am a really, I would say, focused technical trader, super technical trader. Obviously, I pay attention to fundamentals. I pay attention to everything that is going around. I pay attention to earnings, to economic releases, etc. But I try to navigate through these economic releases. I do not trade economic releases. I do not trade non-farm payrolls. I just wait for the dust to settle. I just wait for the first, second wave to settle, and then I can come into the market.
You could always go to the casino to play roulette and bet red or black, right? It's not
I so agree, Dale. Absolutely. It's like, what are we betting right now? Betting on red or betting on green? Are we going up or are we going down? So trading is not gambling. Trading is absolutely very technical and very calculated. And in fact, we have seen a lot of how technical this world of trading is. Not far, starting with February 2nd, when we had the first dip into the market, long-awaited correction. And now that we have the correction, and I agree, it was very violent, we're like, okay, so this is scary. Okay, so we wanted a correction. We knew that we were going to get a correction. The market was insanely running into new highs and new highs each day. I run a trading room, and I would go every single morning into the trading room for the last, I don't know, couple of months, 3 months or so. And I would open up the trading room and I would say, okay, we're starting the day. It's 9 o'clock. The Dow is up 320 points. What now? Okay. Yeah. So what are you going to do with them? Because I do day trade futures. My main focus is futures indices, gold and oil, but also for swing trading, I consider all the commodities that are out there, obviously indices as well. And then again, what do? So you have to take it not only one day at a time, because this is what a good trader taught me, to take it one day at a time and to take it one moment at a time. So if you're a swing trader, the advice that my mentor gave me is not to watch every single tick that happens in the market. If you're a swing trader, try to navigate away. Don't even have smaller time frames on your home screen. Just make sure that you have the time frames that you're trading, the hourly, the daily, the weekly, and the monthly. And once you take a position, let's say based on a daily chart, on a daily setup, on a daily formation, just watch that daily pattern, because that is the pattern that is going to give you all that information. So don't try to take a trade on the daily chart and then try to micromanage it on a 15, because that. So
let me ask you, Anka. Here at ForexAnalytix, we showed how the VIX was not going down during the parabolic stage of the advance in the market. It wasn't trading at 9; it was sticky at 11 or so, with the market blowing off, which was unusual, and showed a chart of every time the VIX and the market go up together, it's normally close to it being over. What were you seeing in the market before we had this historic sell-off, besides it just continuing to go up, that gave you kind of a market tell or message that we could be drawing closer and closer to a two-way binary market and the blow-off might be ending?
That is a great question. First off, I've noticed the fact that there was something very odd that was happening prior to February 2nd. And things were a little bit the things started to look a little bit choppy, and I do watch the VIX. And in fact, I do use the VIX to hedge some of my swing trade positions when I'm trading equities, swing trades and active investing trades. So at one point for about 4 days, we had the market grind higher, higher, and higher, and we had the VIX grinding higher, which was very odd at the moment.
You saw the same thing then. Okay.
Exactly. Yes. So it was very bizarre that they were moving almost at the same pace. And I was even watching the smaller time frames were pretty much doing the similar pattern. So I knew that something was going up, because the VIX do not just go up, you know, when the market goes up, right? It's a fear factor, and so when the market started to rally its last push to the upside, I saw the VIX stall, and then I saw the markets starting to reverse, because we didn't really reverse just right off the bat. So this was the first sign right here. This is February 2nd. This was the first sign. The market was going, this is the first dip in the market and then the continuation. And in fact, this is an inverse trade. Let's say if we would have right now a similar chart right under this chart right here of the Dow or the S&P 500 or NASDAQ or whatever, one of the market indices, we would see that we would have a pretty much a same inverse pattern. So this was the day. This was the day. This is when I started to hedge some of my positions. And in fact, let's just put here, let's say the Dow, because the Dow had this parabolic move to the upside. So this is the infamous February 2nd. February 2nd came with a break of support here at 26,000 that accelerated lower, continuation lower in the next day. At one point around 23,000. Now this is the 200 moving average. 200 moving average was slightly higher. Excuse me. And this was due to the fact because it's a moving average, right? So that's what it does. It moves with price. So at the time of the price descent, it was hitting the 200 MA and bounced quickly off of that. Now, we have been, and pretty much it was a self-fulfilled prophecy in 2016 and 2017. And if there's anything that we have learned from those two markets, was that every single dip was bought. Starting with Brexit, continuing with election, et cetera, every single dip that we had in the market was bought. Now, the question is this dip going to be bought? Is this dip that happened right now in the market still bullish? Because if we look at the long time frames, you know, if you look, let's say on the monthly chart, you know, it's not significant. The drop is not significant. It does not take out the bullishness. We're still in a very strong uptrend. We just had a tap on the 10 EMA. And by the way, I only use a set of very simple moving averages, the 50 SMA, the 20 SMA, the 200 SMA, and the 10 exponential moving average, in case anybody has any questions in regard to this.
I wanted to ask you a question about the VIX, if you could go back to your VIX chart. Because I noticed that you, well, on the chart that you were showing before, you got rid of the tail. I think we spiked to 50. Any reason why on that day we spiked to 50, you eliminated the tail? Because that chart you were showing, it must have been a daily.
Daily. Okay, let's go back to the daily.
Okay, now it shows it, but it looked like it wasn't there, the tail at 50. What do you think the VIX is going to do now? My best guess is maybe back towards your moving averages. If we get through 25, back to 20, and then people kind of feel like, you know, it was just you know, another aberrational event and feel complacent again, and then we get continuation in the VIX to the upside and in the market to the downside. What are you telling your trading room now to do with the market?
Okay, so first of all, we're day traders. We also swing
Okay.
traders, but yeah, for the day trading, let's say section, we take it one day at a time, and I will share with you and the audience what we're looking at. And in fact, I'm going to show you a quick sample of what we're looking at for today. That a lot of traders can actually take from, and they can use it, incorporate it in their technical analysis. So coming back to your question, I think it's very decisive. So right now the VIX is very neutral. We're trading inside yesterday's parameters. So at this point, we're very, very quiet. We're not saying, yeah, we're going to have the market to the upside, or we're going to have the market to the downside. So far the VIX is relatively quiet at this point. I'm going to put the VIX futures here so we can have a little bit more. I love to watch.
Oh, that's why. Okay, because VIX futures did not show the spike. This was the chart.
Exactly, did not show the spike to 50. That's right.
Yeah. Okay.
That's why I kind of showed everything. So far VIX futures right now trading at 26.95. And so we're trading within yesterday's trading parameters, yesterday's lows and higher. We're pretty right in the middle. So it's really it's not really decisive of where the VIX would like to go right now. They're a little bit bullish. That's because we have a little bit of red in the market. But as long as we don't take out the highs, the 28.30. We're still going to maintain these parameters. I think that we may have a chance if we break the 24.70 to go back into the 22.30, back into the 20s, and let's say if the market decides to continue its rally to the upside, perhaps back into the 1750.
People would really get the all clear if we were down under 20. That might really make the market dangerous if that happens. So so you also trade crude. Like everything else, has been under pressure. We're trading under the $60 level. What are you seeing in here now? The trend being threatened, or should we be stalking longs for swing trades? What do you think?
You know what? I think that we're still in a very, I'm going to bring up the monthly chart. I think that we have bottomed out here in 2016 this is one of the temporary bottoms, let's say. We have established higher lows and higher highs so far. We've had a tremendous rally, 1, 2, 3, 4, 5 month rally. Coming into January. February just took off January's gains, and it's trading at the December levels right now. So there's nothing major happening. And I think that we may still come into the 55.50 level. This is going to be decisive. This is going to make it or break it, because I expect a rotation off the 55.50 area. If we should pull in that far, lower on the monthly chart, I think 55.50 area is a minor support area. Rotations at this point highly likely to happen if we're going to maintain this uptrend. And we also have this 10 EMA here. Tap on the 10 EMA into minor support. So we have a lot of things in our favor right here for a reversal higher. And that would actually represent the fourth higher low, which is really conducive of a break above 65 or 66 that we've just that's a phenomenal number, right?
Yeah, it comes up a lot. Yeah, I know. It was a low in the S&P in 08.
Right. And if we break above this, we clear the way for a continuation higher. So we were due for a correction in crude. Definitely, we had the 200 SMA here. We had a really nice rally. Once we broke these highs of $55 here, it was poised to continue higher. I actually had a profit target on it into the $63.64. It ran even further than that into 66 and change. Rotation happened on the monthly chart, but there's nothing very significant even on a weekly. Well, I agree, and moves tend to be a little bit more violent that I have noticed now. So volatility is a big thing, and I think one of the reasons why we get such volatility is because we have a lot more trading computers traders, HFTs that are trading, and it is a highly technical market. So they reach those levels, and we have the triggers, boom, 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 that are carrying the price lower. A lot of stop outs that are happening at that level. So that creates the flurry to the downside and to the upside. And even when the markets open between 9:30 and 9:45, usually there used to be like a 3 to 5 minute fleecing effect. Now that fleecing effect, due to the volatility, the balancing occurs now in the first 15 minutes. So it takes a long time for the market to calibrate before it actually sets up for a trend or for a push higher or even lower. But coming to crude here, I think it still has a lot of room to continue. Little lower, $58 into this area. I will look for rotation. In fact, last week I did make some posts on Twitter, and I was watching the $61 area for a possible rotation back to the upside as a possible buy. But now things have changed a little bit. We had a little bit more of a steeper pullback. We have the 61.8% here. I see this still as very bullish. So if the price will decide to reverse back into the $60 area, I will look for an aggressive swing off this level. And I will consider 58 as the stop. And in fact, I will zoom in for a tighter stop at the time of the trigger at a higher pivot.
Okay, you want to see confirmation. You want to see it do something right. Let me give you something a little old school. And I was talking about this in January, being an old commodity guy. There was something traditional called the February break, where every February air was taken out of commodity markets, which is what happened in crude. And I guarantee you after this February, people will be paying attention to that month going into the new year. So February break was definitely something that's, been around for decades and manifested. So February is a month not to be long much in my book. So what I'd like you to do now, Anna, it's been great talking to you. We know that people, in fact, I want to ask you, how did you come up with your handle, Trade Out Loud? Because you were shy and you wanted to learn how to assert yourself and express yourself? How did you come up with it?
Okay, I don't get that question a lot, but it came from the fact that I had a lot of people approach me because I was sharing my trades, I was sharing everything, because Trade Out Loud just came about in 2011. So I've been trading for a very long time before I came up with this education company. So in fact, I had a lot of people, come to me and say, okay, how do you do this? How do you do that? Can I trade with you? And at first, this is what it was. So I had a big hangout room, and I was trading with a bunch of traders. We were a bunch of professional traders, and we were, kind of like taking in, a lot of traders, and we were just, they were picking our brains, and I would walk them through all my trades, and I would walk them through my thought process, and that's how Trade Out Loud. So I was literally trading out loud. I was telling them, okay, what I'm getting in, what I'm seeing, explaining, because I think one of the most important one of the most important things when you're trading is to, even if you follow someone, is to understand why is that person getting into that trade, and just not trade blindly or have confidence in a person, but have confidence in the thought process and the analysis. And once you are in sync with that, then you can actually roll into the trade.
Yeah, because then you learn. If you're lazy and you're not learning, and whoever it is that you're modeling or copying trades from is on an island and not doing it publicly, you're lost. So that's a pearl, Anna, that Trade Out Loud is how you were mentoring people before you started your business. So if you'd like, you could show your website. I know the best way on Twitter, your Twitter handle, I just said it, is @TradeOutLoud. That's also the name of your website, correct?
Yes, that is correct. Yeah, I'll put it right here. Okay. So this is the website. It is tradeoutloud.com, and we're specialized in trading education, and also we're implementing what we're teaching on a day-to-day basis. I teach day trading and swing trading futures class. I love trading futures. And I'm also swing trading stocks and ETFs. So if you guys want to take a look, if you want to, cruise around the website, and if you have any questions, feel free to email me, info@tradeoutloud.com. More than happy to talk to each and every one of you. So thank you so much, Dale, for having me here today, and good luck trading, guys.
Thank you so much, Anka, and you're now my trading warrior sister. I wish you and everyone whose words you touch and are following you all the success in the world. So thank you so much for your time today.
Thank you so much, Dale. Thank you.
Very nice to meet you.
It was great meeting you. Thank you.
You're very welcome. That's a wrap, everybody. Kind of lighten up in front of the CPI tomorrow, and we'll see everyone for the CPI number. Should be a market mover. And most of all, remember, don't just count your pips, count your blessings. And I'll see everyone tomorrow. Thank you again, Anka. And I'll see everyone for CPI tomorrow before the sun comes up in Southern California.